Hey guys, welcome back to Smart Trader. Hope you guys are doing great. And in this particular video, we are going to discuss the ultimate guide to money management. So without wasting much of your time, let's discuss what is money management for the ones who don't know. So money management is basically managing your money or capital, whatever you say it. So managing, how do you manage that? By managing your reward and risk. Right? If you see in any business, the money management will be very important. When a company starts, they don't just blindly see, okay, how much revenue we are going to make and how much reward we are going to get from the business. They also calculate how much losses can we take. If things doesn't go as per their plan, how much risk they can take, how much loss they can take, that also will be calculated. So that is also part of money management. So same thing is applied in trading, because trading is also a business. You consider it as business, these important things are very important. So money management also will come into trading, which will make your trading more better and you can sustain for a longer time in the market. So let's go step by step. So I will go with each step by step I've created for you guys, so you understand with few example. So I'll try to make it more simple so that beginners who don't understand concepts will understand through these examples. Now the first point is considering your account risk. Now when I say account risk, few people would have kept certain money for intraday trading, a little bit of swing trading or long-term trading of a mutual fund. So I would consider this as different accounts with different risk. So whether you're kept in single trading account or if you're kept in multiple trading account, that is fine. But everything has a different risk. Now you have to consider what is your risk based on your account. Let's say you have a capital of, let's take an ideal example of 1 lakh rupees capital, okay, rupees. 1 lakh rupees capital is there. Now either you are an intraday trader or a swing trader. Now when you're a swing trader, you may take, let's say for a few days to few weeks you're holding, you can have a, let's say, stop loss of 5%. All right. So but same thing for intraday, you cannot have a stop losses of 5%, right? Because you will be trading again and again. So maybe let's say you are going to take 1% stop loss for the capital for the day. 1% is 1000 rupees loss for the day. You're going to take 1000 rupees loss for the day, 5 days loss for a week, you're going to make 5% loss, worst case. Or same way for swing trading, maybe 1 week you waited, 2 week you waited and you booked 5% loss, or in 1 week you booked, or 1 day you booked. So you booked for a week, you took 5% loss, or 1 month you took 5% loss. So two different account has a two different type of risk. So what I'm trying to say here is, the more often you trade, keep trading, the risk is higher. Okay, the risk is higher the more you trade, because intraday trading the risk is more because you're trading more and more. Swing, the number of trades are going to be less, so your risk is going to be less in terms of swing. Long term, again the risk is going to reduce. Based on your risk, you need to consider your money management. So now this depends on different traders. Now I have taken example of 1% risk taken for intraday trading. There are traders who take 2%, 3%, 4%, 5% depending on their trading style and strategy. So in this example, I have just taken 1% loss a trader wants to take for intraday example. So strategy and style of trading is the next point which you have to consider. So in this example, what we have taken, that on overall account he's going to take maximum is 1%. That is nothing but he's going to take overall 1000. That is the maximum loss for the day he can bear. So based on his account type, his account is intraday type of account. For a swing trader, it will be totally different. So you can calculate based on these examples. So we are taking example of intraday. So 1% is the loss maximum. So 1000 rupees I can take loss today. After that I will not trade. Tomorrow again I will trade. Maximum I can take stop loss of or overall loss of 1000 on my account. Now coming to the strategy and style of trader. Now there is a, I have taken example two different types of trader. Let's say your strategy, or you will have two types of strategy also. So one type of trader is having, two trades, okay, for the day. He is going to do two trades. If profit good, profit good. If loss, again he's going to take stop loss, second stop loss, close for the day, okay. And one more trader is going to take 5 trades for the day. His setup is like that, because he's going to scalp at different let's say on breakout or on momentums. He's going to take scalp in each level. So he's going to take 5 trades, maximum 5 trades. If 5 stop losses hit, it's done for him. Okay, so that is his setup. Okay, so if he's going to do 2 trades, 3 trades, it's a loss for him, because his setup can give up to 4 to 5 signals for a day. So he has to trade 5 signals for the day, and someone has to trade for 2 signals. That is the effective edge of his strategy. So now what he has to do, we'll take an example of a person who's having 2 trades. Now a person who's going to do 2 trades, if he has to take maximum loss of 1000 rupees, then his capital should be around, let's say example, 50,000 rupees, because let's say his strategy, okay, his strategy also has a stop loss, whether 0.5, 1%, 2%. Let's say his strategy has a 1% stop loss in this default example. So if on 50,000, 1% stop loss hit negative, he's gonna lose 500 rupees, and one more stop loss of 1% is gonna become 500 rupees, and that is gonna become 1000 rupees. So that is nothing but your overall stop loss for your account for that particular day. So here, what is the capital derived? 50,000 is what he has to use if he has to hit maximum of 1000 rupees. Now, if he wants to lose 2000 rupees, 2% for the day, then he can change his capital upon him. I'm just giving general example. But if the same thing for a strategy with 5 trade, you cannot use 50,000. It's gonna go 5 5s are 2,500 rupees, 2.5% you will be losing. So now in this case, let's say he's gonna use only 20,000 rupees. So 1% stop loss is gonna hit 20,000. 1% is 200 rupees. Okay, into 5. Let's say worst case, I'm just giving example. A bad trader, 5 loss is equal to 1,000 rupees. So he is doing plus and minus, plus and minus, plus and minus. Finally, in a worst day, he got 5 stop losses done. He's not gonna do revenge trading on 6th trade or 7th trade. Morning only it's done, 5 trades, 5 signals over. So he's reached to his maximum loss based on his account type. His intraday account is gonna take 1% on the capital. So he has reached that. He has to stop for this day. All right. So now what is the difference? Based on your strategy and based on your style of trading, based on your setup, you need to decide your capital. The same capital, if you deploy for the other strategy without understanding and backtesting the strategy, then things are gonna go wrong for you, and you're gonna lose your edge if you don't take 5 trades here. Okay, thinking that okay, I use 50,000, I can hardly do 2 trades for this strategy, but actually I had to trade for 5. So you're losing your edge in your strategy. So now let's discuss about drawdown. Okay. So now you'll be thinking, okay, why 2 trades? I have 1 lakh rupees. I will take only 1 trade. What if a trader trades only 1 trade? Okay. And the loss of 1% stop loss as per strategy, 1,000 rupees loss. All right. But you need to understand something called drawdown. When I say drawdown, let's say you had 1 lakh rupees. Okay. 1 lakh rupees. The first 1% loss, your account became 99K. Now tomorrow, if you have to trade with 1 lakh, do you have 1 lakh? No, you have 99K only. Even though if you make, let's say example, you make 1% profit, you will not get complete 1,000 rupees. You will get only 990 rupees. Okay. So if this drawdown, okay, drawdown is nothing but from wherever a peak point your account has reached, from there how much it is going against you, how much percentage it has fallen. Let's say from 1 lakh example, it's not that you'll directly go negative. It happens when you'll make profit, from there you may go down. So you're using 1 lakh capital, and from 99, let's say 5 days in a week you made losses, 1%, 1%, 1%, 1%, 1%, total how much? 5%. The 5% loss for the week, overall your account came to 95K. Okay. So now again 95K, 1 lakh, what is the difference? Almost you are, if you make 1%, again 950 rupees only you're gonna make. And the purchasing power, okay, the buying power is reducing. If you have to make 1,000 rupees, then you have to make more than 1%. So that is not right. So you should almost use the same quantity. If you are going based on your risk reward ratio, let's say 1:1, you need to follow your quantity should be same. Okay. If you decrease your quantity because of losses, that is a mistake happening because of your setup. So using whole capital of 1 lakh is something wrong. Something is wrong over here. For example, a person who was using a 50,000 rupees, let's say he's using how much? 50% of his capital in this example. Let's say he's buying stocks or something. Even if he makes that 1% loss on the capital of 1 lakh, okay, but he's deploying only 50,000 rupees. How much will he be losing? 1,000, 5,000. So still he has that 95,000 rupees in his account, right? So he'll be again using only 50,000 for the next day to buy, for the next week to buy. He can lose up to how much? 50K. So this person has that potential to hold on to 50% of his capital. So this Drawdown is very important. Based on your strategy, you need to, in your back testing, you need to calculate what is the drawdown of your strategy. Maximum how much I can go negative, negative, and negative. Even though I go negative, my purchasing power should not reduce. So this is some very important in terms of money management, which you need to understand, which most of us didn't know, nobody taught us. But as per experience, when we made mistakes, when we started researching and learning, these are the things which we came to know and which we have applied in our trading, and our trading is getting better. So by understanding all this concept, we will come to a conclusion that understand the ideal capital required based on your situation. Okay, when I say situation, let's say someone who's retired and someone who's working. Okay, let's say who has retired, they're going to put all your money in the stock market, and they don't have other sources of getting money. Okay, so if they are taking higher risk, then it's going to be a problem for them. For example, 50,000 was used, that is 50% of the capital was used by someone. All right, maybe he doesn't want to take 1% on his overall, he wants to take only 0.5%. okay, because if he loses quickly, he doesn't have any source of money to come in. Okay, not just intraday. A person who's doing retirement may not take a high risk of intraday. He may go with less risk, let's say short-term trading or long-term trading, mutual fund, and so on. Person who's working, he knows that okay, he has this extra money now, and he's also having a source of income, either businessman or working person. He has age to work, so he knows that I'm gonna get some money from any different source. So he can take more risk over here. Maybe he's doing intraday. Now he may use 50% of his capital and taking 1% risk on his overall capital. So he is taking more risk. Or let's say someone is taking 2%. So based on your situation, take your risk, calculate your risk, because the more risk you take, the chances of losing your account from 100 to 50 or 0 is higher. So if you reduce your risk by reducing the position size basically, then your risk will also reduce on your overall capital or your saved money or your extra money, whatever it is. So based on this, you decide whether I should use whole of my capital, 50% of my capital, or this is my retirement money, I will use only 20 or 15% of my capital for this type of purpose. Rest money, which is just ideally fallen, I will just put in some mutual fund, let it slowly grow. If required, I'll take it out. In that way, you have to manage your money. And this is overall how you do money management, not just using your 1 lakh rupees overall for the day. Bro, I'll just have 1 lakh, I will invest of 1 lakh. No, if you're having 1 lakh to invest, at least let's say, like I given you, consider the drawdown, consider the stop losses you're going to take, the buying power you should have, consider maximum how much you can take, and based on your strategy, will you sustain? So if your accuracy is good, then yeah, your risk also can be taken because your reward will help you out. If your accuracy is bad, number of stop losses is going to be higher, then the risk also should be considered and the capital used also should be reduced. So that is what a lot of people say, position sizing. You need to consider a position sizing which will save you. So that comes under money management. I hope this money management guide for beginners helped you guys. So next time, instead of saying I know a strategy, I know a risk reward ratio, I'm also working on my discipline, but if you don't know money management or your capital management, then like I told you example, even though you have good risk reward ratio and you're trading with 1 lakh, the time you make losses, tomorrow your purchasing power is going down. So money management, position sizing will come into picture. So concentrate on this. This is just a basic for you guys, outline I'm giving you. Go and research about this more and more. Work on this, write in a paper, write in an Excel based on your capital. I gave 1 lakh example. Based on your capital, what is the maximum stop loss you want to take for the day on your account, and as per your strategy, how many trades, so how much capital I should deploy, so that you are in proper control. So hope this video was an add-on to your knowledge. If you like such video, hit that like button and subscribe to the channel. See you soon with one more basic learning video. Till then, take care, stay safe.